Erin, do you agree that U.S. exceptionalism can only go so far and that it's kind of running out?
I actually disagree with that statement. I mean, you've seen a decade of U.S. outperformance, but I think that's been really justified by the fact that the U.S. is a higher quality index. It has higher free cash flow generation than its European or other developed market non-U.S. peers. And in addition to that, in a market where you're getting, 5-6% yield on cash right now, cash-rich U.S. companies stand to benefit from being able to invest that cash into, decent yielding environments. So I think that the preference for quality, particularly in this type of cyclical environment, is going to continue to outperform. And I think that the U.S. is best positioned on a regional basis to take advantage of that.
There are a couple of questions embedded within this. Number one is how long can the U.S. ride its tech wave, right? And that's been a big question. There's also this question of whether the U.S. can get disinflation without incurring some more economic pain. Can we start on the latter to begin with? Do you think that that is possible to get that disinflation that the Fed is seeking without seeing the kind of pain in the likes of Europe and elsewhere that's transpiring?
So you are starting to see inflation come down. I think the question really is it going to come down fast enough and far enough in order for the Fed to meet its objective of 2%? I think that you'll likely see, it's probably a safe bet that you'll likely see additional financial condition tightening, at the end of this year and through next year, whether that's through markets itself or through the Fed doing one more interest rate hike. And I do think that that will get inflation down, but it's probably going to still remain sort of sticky in a high 2% range through the end of next year, which is, I think, going to be difficult for the Fed to really engineer any type of accommodation with interest rate cuts. So I do think it's a fairly fine line that the Fed is going to be facing next year. But ultimately, we are seeing inflation come down. I don't think you're going to see significant economic pain in the U.S. You may see some retrenchment in growth, but it's going to be a very low growth, not necessarily severe recession as we enter 2024.